You pointed out something, Stephanie, that I missed entirely about trade.
Yes, one of our very sharp-eyed trade journalists noticed that sort of quite late in the evening at the end of last week, the White House announced that they were going to expand the steel and aluminum tariffs that they'd put on imports of steel and aluminum 2 years ago. And what's striking about that is they're having to expand it, and so it's not just steel and aluminum imports, but actually things made from steel and aluminum. So, really exciting things like nails and staples and cables. But this is an admission that those initial tariffs had not really done what they wanted to do. Obviously, President Trump wanted to help the steel industry and shore up, get them to maybe reopen some of those steel mills that have been closed, that he got a lot of mileage of from an election. It had some positive effect on them. It increased their profit margins initially, but actually a lot of companies who needed these products just decided to import the nails and staples and things made out of it, which is what always happens with tariffs. Things always get complicated in trade deals, in trade wars. And in fact, prices for US steel have gone down about 30%. Profits are down. Market cap of these companies are down. So they are not doing a lot better than they were a couple of years ago. I think, the lesson is you don't always get what you want from your tariffs, but you can also end up in this kind of whack-a-mole situation where, if you put tariffs on one thing, then there's another way that the imports will come in. So you have to put tariffs on that. In the meantime, you're massively distorting things for US business people who actually need to use these products.
And the economists, I think, would have told the president something like that if he asked them. At the same time, economists say the trade deficit doesn't matter. We got GDP numbers, actually, the beat to the upside, surprised people. It's because the trade deficit had narrowed. So maybe the president has a point, Joe. It could be right.
I think there is a lot of research that's been done that talks about the China shock and that there really was a degree to which China's entry into the WTO did buffet a lot of U.S. industries. Workers were, in fact, hit by it. I think that part is real. I think, on the other hand, the idea of targeting a bilateral trade deficit with China, to use your phrase, whack-a-mole, sounds exactly right. You could put increased tariffs from goods entering from China, but that could just cause import substitution elsewhere, and in the end, the position remains the same. So I think there is an emerging view among many people that we have made mistakes with regards to our industrial and trade policy in the past, that often U.S. workers have been hurt. But I think there is skepticism that the sort of very numbers-based approach by the Trump administration that, okay, well, if China just agrees to buy more agriculture exports from the U.S., that's going to help things, because then that just creates shifts elsewhere and doesn't really change the dynamic.
But we had another deal. We had President Trump signing USMCA, and that has the rules of origin for automobiles, which are specifically directed to what Joe was just talking about, make sure there's some workers in the United States.
Yeah, and what was interesting about this administration is they came in with at least a couple of advisors who fundamentally disagree with the model of globalization that big U.S. companies have followed for the last 10 or 20 years. This idea that you have very disaggregated supply chains, you go to the cheap, you're outsourcing to China and everything. The U.S. had been the biggest cheerleader for that, and I thought it has been a very striking feature of this administration that they have either considered or done things that explicitly go against that model. And I get, but the one problem is, there's not part of an overall discussion around the future of globalization, or how do you protect workers from the impact of globalization. It's this somewhat more random, the White House wants to keep charge of everything, really just wants to beat up on people and have control over the rules. Those rules of origin, they want the White House to be able to, by its own discretion, change them. Literally change them. And which you can imagine.
By plant, state by state.
Which you can imagine the companies who already worry about where the next tweet might come from, that is quite a stick.
Well, also thinking about it from a market perspective, as your point reminds, this story is not going to go away. There's going to be trade headlines all the time that are going to keep people on their toes.
That's for sure.